So let's just say you have a business and your business makes $10 million of revenue a year. And let's just say $6 million of net profit. A lot of people will be paying close to 40-50% of that. Let's say 2 to 3 million in taxes. If you donate some of that, depending on the entity structure, you can donate on general 30 to 60% of your net profit and get a tax deduction for that.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, so you're probably in a position where you're paying a lot of your income to your greedy uncle, and you want to put a stop to that. And if you're a high net worth individual, it's very easy to do that, perhaps easier than ever. And we've got Casey Chohan with us now. Casey, you help people pass on wealth generationally. I think I got that right. And you use foundations to do it. How did you wind up getting into this area?
Oh, it's a long story, but my background is in accounting and finance. Born and raised in England. I graduated university, got a job with a big Fortune 500 company, making cups of tea for the real accountants, and then quickly worked my way up the ranks. Well, I say quickly, 8 years later, I was running the North American region and started my own business. At that point, I had no idea how to run a business. I'd only been a student at university and then a corporate employee. So we got into CFO services, which is what I was effectively doing internally for the big Fortune 500 company. And that then led to solving the same issues or seeing the same issues on a monthly basis from lack of financial knowledge for business owners. Mm-hmm. And then with our first few clients, quickly realized it wasn't just financial knowledge, it was also lack of tax knowledge as well. Especially here in America, I could see both sides of the taxation system coming from the UK. But there was a lot of specifically in taxes. So we niched down into that and then figured out what all these elites are doing to save money on taxes and pay single-digit tax rates. And Warren Buffett goes on TV and gloats that he pays a lower tax rate than his secretary. And, ProPublica has released tax returns that a lot of these billionaires are all paying single-digit tax rates. So we figured out what they do, which is, like you mentioned, all in foundations and nonprofits. Mm-hmm. And then re-engineered that so that the average millionaire, multimillionaire can use those same structures. One, to pass on legacy to their family, but also make a difference in their community, all while saving money on taxes.
So I always thought like a nonprofit, you give up control of your money and it goes into this foundation, eventually winds up like the Ford Foundation or the MacArthur Foundation. And that's the end of your involvement. So how do you keep control while still putting your money into this nonprofit?
It's all to do with the subsections within subsections of these nonprofits. So if you look at normal business entities that most people will know, let's use an LLC as an example, S Corp and a C Corp. They're all structured based on ownership, either shares or members, right? So if you and I both owned an LLC and we were 50-50, we would both own our independent 50% shares. The way that nonprofits work, again, there's different subsections. So you could go into an operating nonprofit, a non-operating nonprofit, a private foundation, a public foundation. There's so many subsets in that world, the same way they are in the LLC, S Corp, and C Corp world. So the subset that we uncovered during our research into all these billionaires was it's a non-operating private family foundation. That's the entity type that allows you to donate to that entity, get the tax deduction at the personal and the LLC level, whoever's donating into it. But then, like you mentioned, on the flip side, retain control of that entity. So you could, as an example, be the president of donate to it from yourself and then fully control the activities of that nonprofit, which is very different to a lot of the way other nonprofits are set up and structured, where you have to have at least X amount of people on a board, you have to have different subcommittees. There's a lot more flexibility with a private, non-operating family foundation.
So the private, non-operating foundation is the key, huh?
That's what we found. That's what we use.
All right. So you managed to still take control, but you can't get any money from the foundation once it's set up, can you?
Yeah, there's very strict guidelines and rules on self-dealing and disqualified people, which ultimately means if you've put in money, let's say you put in $1 million of cash and you get the tax done, you get the tax deduction on your personal taxes, you can't turn around and then use it again. So you got to be very careful about sticking to the rules. The key is knowing what those rules are and knowing that these types of foundations often own multiple private jets, yachts, real estate all around the world. So the preconceived notions that most people have are not in fact true, and there's a wiggle room within them if operated correctly.
Interesting. All right. So give us an example of how this works.
So let's just say you have a business and your business makes $10 million of revenue a year, and let's just say $6 million of net profit. A lot of people will be paying close to 40-50% of that, let's say 2 to 3 million in taxes. If you donate some of that, depending on the entity structure, you can donate on general 30 to 60% of your net profit and get a tax deduction for that. So then, in argument's sake, it's $1 million just for round numbers. You can get $1 million tax deduction in your business so that you don't have to pay that personally. And then that $1 million isn't just given away. It's donated to a charity where, on the other hand, you fully control that charity. So you can invest the market in real estate, in pretty much anything that you see fit, as long as it isn't classed as too risky. So don't go for penny stocks, go for the big blue chip stocks, as an example. But you fully control those funds. Now, the beauty about it is with a private family foundation, you can hire other family members. So you can hire your kids on payroll, your wife, your uncles, cousins, brothers, sisters, whoever you wish, and they can all take an active part in that foundation. You can then also do foundation retreats and foundation activities all around the world, wherever you wish, to make an impact. So if you wanted to go to Australia and take all of the members of the foundation with you to go do a retreat in the outback, or go on safari somewhere in Africa, or whatever it is that you want to do to help make an impact for your charity, then you can do that. So that's some of the common ways. And then I touched on it a second ago, where assets can also be owned by these foundations. So a lot of the time, what you will see is that foundations have lots of real estate. The reason real estate is used a lot is because there's something called the property tax exemption. So if in certain circumstance, if your property is fully paid off, so you have no mortgage, you can get a property tax exemption, which is a huge deal for the right type of people, because you could be paying 1%, maybe 1.5% of the property value in property tax. So if you've got, let's say, $100 million portfolio of real estate and you're paying 1%, that's $1 million a year you'd be paying just in property tax. There's a lot of different advantages of having a foundation that the right type of person.
Yeah. Don't the towns, though, and the counties fight these property tax exemptions to foundations?
No, you just got to apply and you got to get the exemption, both at, like you said, at the city level and then also at the federal level as well.
Yeah.
But as long as you're not using that property as a and it is actually used as part of the foundation, there shouldn't be any issues with that. What you tend to find is a lot of the bad press that has happened over the years is people are putting their primary residence into foundation, the same deductions, which they shouldn't be doing. And that can actually lead to losing your tax exempt status. So I'd highly recommend not doing that.
Yeah. So you got to be very protective of your tax exempt status, right? So
Absolutely. Yeah, because that's the key to getting zero capital gains, because within these foundations, there's no capital gains tax as well. They have something instead of capital gains tax, it's called net investment income. And that's only taxed at 1.39% right now. So it's a much lower rate at 1.39% compared to capital gains tax, which can be anything above 30% usually.
So what's your minimum income required or assets to take advantage of something like this, Casey?
Generally speaking, when you go to the likes of UBS or any of the big banks, they're looking for you to have a 20 million plus portfolio, take your full relationship over to them and be locked in with them for the long term, or a multifamily office will do something similar. But what we're trying to do is get to that lower level of millionaire that is successful and doesn't want to tie up everything. So if you're making above $5 million a year in your business, or if you're paying over $500,000 a year in taxes, this usually makes sense to look into this as one of your options in your overall strategy.
Right. All right. Really interesting. Hey, any millionaires out there, if you want to get in touch with Casey, how do you do that, Casey?
Yeah, just go over to togethercfo.com. That's togethercfo.com.
All right. Well, I could talk with you for quite a while on this. I find it fascinating, really interesting that these things are available. Hey, got a question for Casey or myself, shoot me an email, kl@kerrylutz.com, and you'll find a link to Casey's site in the show notes to this interview on financialsurvivalnetwork.com. Please sign up for your free newsletter. Got a lot of money-saving ideas, money-making ideas. You don't necessarily have to be a millionaire for them, but it doesn't hurt either. And Casey, appreciate you coming on. Talk to you soon.
You're welcome. Thanks for having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.